Hi there, Serial Trader here. I'll do a weekend update on the major US indices and looking at this hourly chart here of SPX. So nothing has really changed a whole lot since the last video. I am still looking for us to start trending down here, and the key level to hold on SPX for at least the short-term bearish expectation to remain intact is staying below that level we put in at 28.79. 22, and that's where this horizontal yellow line is showing there. So far you can still label this an initial wave one down. Still like that we broke out of this channel that we were in. Now we're doing a fairly deep retrace, and whenever you do a deep retrace, you always feel threatened that it's going to retrace by more than 100%, and therefore not just be a retracement. But so far, it has held the key level up there. And let me just adjust this. I think we're currently in between the 618 and the 786 retracement. So let's say we do go make up a slight new high above this level, which was at 28.44.90. That would simply just be a relabeling for that being the wave 2 peak instead of here. But the real key level, again, to hold, at least on a short-term basis, to stay bearish here, is stay below the yellow line. So again, 28.79.22. And I do have those short futures with the stop just above that high on the equivalent ES level. So on the ES futures chart here, my stop is just above 28.85, so it's at 28.85.25. And I think the reason the levels are a little bit different there, well, first of all, usually ES is always slightly different than SPX. It typically trades at a slight discount or premium, depending. But I believe this high was made in a overnight session, whereas on the regular trading hours where SPX traded, that high was not made. But nonetheless, that's what I'm defining my risk as here for the short futures position. 28.85 is the key level there. But back to SPX. So yeah, short against that key level, and ideally we top out here immediately and start trending down strongly. But if we don't, I will be stopped out of the futures. I'm not going to get rid of those July SPX puts. I'm going to be more patient with those, because I think that even if we do invalidate this short-term pattern and we do go a little higher here ultimately, I don't currently think we're going to, but I'm certainly open to that possibility because anything can happen always. If we do that, then what I'm kind of looking at here, let's go to the daily chart. And let me just clean this up a bit here so it's a little less cluttered. Looking at this daily chart, if we were to break the high there at 28.79.22, we have a relationship of A versus C equality for this ABC zigzag. We didn't quite achieve that yet, so if we were to achieve that on a break of the high, 28.92 comes into play. And then of course we have the 61.8% retracement at 29.34, and there's also some gaps to fill. So if you look over here, there's a gap that would be filled at 29.01.54. And then there's also a gap even higher than that at 29.99.83, so just about 3,000. So two unfilled gaps overhead, a 618 retracement, and the equality relationship. Those all remain above the current high. So if we do break the existing high, that would be a nice area, confluence of technical areas to kind of find the next resistance area. And also, I believe the 200-day, I haven't got it illustrated on this chart, but I'll go to it on Thinkorswim in a moment. The 200-day moving average is also right around this upper gap fill here at 29.99.83, right around 3,000. So quite a few technical areas of interest to look at if we do break above that 28.79 high. Keyword if. And that's why I have a stop there, because if we break that high, we could go good 100 plus points higher potentially. So you don't want to just sit through that and you know, hope is not a strategy. If the level gets broken, take your stop. You can always re-enter again. It doesn't matter. But unless you have a significant pivot to define your risk against especially on something like a futures position, you don't want to just ride through that and hope for the best. That's not the way to do it. Okay, so I believe that's really what I wanted to go through here. Bottom line, as long as the highs remain intact here, I'm expecting some sort of decline here and probably an initial A wave down, but we'll certainly assess as it progresses. Okay, so to the Thinkorswim candlestick chart here, looking at the daily candle, so we're still inside the range of Thursday as of Friday's trading, despite being a positive day. It was basically just an inside day. Let's see here. The low of Thursday was 27.94.26. And we slightly broke the low of Thursday on Friday, 27.91.76, and then bounced up strongly, but was not able to take out the high. So essentially just an inside bar, inside day. We're sitting basically right around that 50-day simple moving average still. We're still above the daily T line, so we haven't actually gotten the confirmation of a technical breakdown just yet. And as I was saying before, if we do break that 2879 peak up here, 200-day simple moving average currently sitting at 3,799, so right around 3,000. And again, that coincides quite nicely with this gap here at 29.99.83, and then of course there's that gap that's before that, which would likely get filled on a break of 28.79, and that comes into play to fill the gap right on this candle. Would be 29.01. So we'll have to see what happens. I'm still kind of liking the bearish setup here, but certainly the deeper it retraces, the more your confidence gets tested. But ultimately, I'm not going to give up on that short-term bearish trade unless we break the high. Okay, now on the weekly candles here, let's see if there's anything to point out. Okay, interesting. So on the SPX weekly chart, we have potentially a hanging man candlestick. And at the upper end of a trading range like this, a hanging man could be an important reversal candlestick, so bearish, but we need confirmation. So we would have to break the low of this candle, and of course that's the low of the week at 27.21.1. So interesting, potential reversal candle here on the weekly, but awaiting confirmation. And of course, that will coincide with a breakdown on the daily chart here as well. Okay, now we'll go to the Dow Jones Industrial Average. The Dow very much in a similar situation, slightly weaker. You can still see we're respecting below that 50-day simple moving average, so relatively weaker than SPX, but largely the same technical picture. Expecting this high at the moment to remain intact at 24,264, and looking to break down here and take out the recent low there at 22,941. Now on the weekly chart, we'll see what kind of candle we put in for the Dow this week. Same idea, potential hanging man candlestick. Again, awaiting confirmation to the downside. It's only a potential reversal until you actually confirm by taking out the low. But it's certainly there. So weekly candle, potential reversal candle definitely catches my attention. Okay, that's the Dow. And Nasdaq Composite. Now the Nasdaq Composite, I've put up this parallel channel because unlike the Dow and the S&P, the Nasdaq has not broken out of its parallel channel yet. And it looks like it really is threatening to break above the highs over here. Although I'll believe it when I see it. So potentially the Nasdaq's still in the same scenario where we have this initial move down, maybe a little wave 1 down. This is a deep wave 2 retracement potentially, and looking to confirm and break down here, but just relatively stronger than the other two indices, and you can see that just by the fact that it has not broken out of its parallel trend channel as of yet. So certainly looking for that to happen. and the Nasdaq really starting to break down and show some bearish follow through would definitely be a nice piece of confirming action as far as the rest of the market falling down, but it hasn't happened yet. Okay, now if we do get up here, the Nasdaq composite has a nice, well, let me see, did we actually fill this gap? Oh, interesting. So the Nasdaq did fill its gaps here, unlike the other two. So we filled that gap at 86.7739. Let me just make sure we actually 86.70, 86.8491. Yeah. So we did actually fill this gap. So that kind of has me thinking maybe that's a top in place, but we're so close here to violating that we have to see some, essentially immediately we have to see breakdown to stay at least short-term bearish here on the Nasdaq. So definitely keeping my eyes here on this parallel trend channel. I think it'll be significant if the Nasdaq breaks down below it, which it has not done yet. Okay, a weekly candle on the Nasdaq. What do we got going on? So still potentially a hanging man candle, where we have this long lower shadow, small real body, but again, definitely awaiting that reversal and confirmation. It's just not there yet. And you can see, just interestingly here on the weekly, you're so far hitting some resistance at that 20-week simple moving average. So we'll see if that holds as well. Just an area of interest to point out there, since it's touched it but respected it so far. Okay, so that's what I'm looking at there on the Nasdaq. And interesting that it's just showing so much more relative strength to the other parts of the market. But maybe that can only last so long, right? If some real fear starts setting in, then it doesn't really matter what part of the market you're looking at. Everything kind of sells off together. But we're not seeing that just yet. We certainly saw it, in March there, but not quite happening as of yet. Okay, now on the VIX, definitely something to point out here. So VIX making new lows. Typically if VIX is still bleeding down and making new lows, that's kind of bullish for the market. So definitely the little volatility uptrend that looked like it was developing, that's been extinguished for now. So that's a slight, development in favor of perhaps higher highs in the market, but I'll believe it when I see it. Definitely worth noting though, VIX is not taking off. In fact, it's breaking down for now. VXX, volatility ETN, little uptrend still intact so far, but certainly being threatened here. And we're back below that blue moving average. So I'd say whatever little signal this was giving as far as the market potentially turning bearish, it's at least neutral now, if not extinguished. But definitely watching. Maybe we immediately resume, but we'll have to see. Okay, VIX tool. Things to point out. So yeah, VIX and VVIX making new lows together. So there's no more divergence between them. And below the red moving average on VVIX, and we're back up above the blue moving average on SPX. So that sell signal from before has been extinguished for now. And well, one thing to point out. So there is just one divergence left. So VIX and VVIX making new lows, lower lows. SPX not making new highs. So that's potential divergence that could quickly get erased if these keep drifting down and SPX gets above that 28.79. That divergence will disappear. But for now, there is that divergence. So potentially indicating that SPX is about to turn back down, but definitely not a high confidence scenario. There is no active sell signal right now on this tool. Just thought I'd point that out. Okay. Well, that's really all I wanted to go through this weekend. As far as I'm concerned, this basically has to start selling off almost immediately, or else we're likely going to go up here and test some of these higher technical levels. And again, some areas of interest, that 200-day simple moving average, and these two overhead gaps, and then of course those Fibonacci levels I went through earlier in the video as well, all kind of in this area. But still short-term bearish as long as we hold below 28.79.22. That's the real message. For now, just kind of patiently waiting, let the market show its hand, and we'll go from there. Okay, I'll check in next week sometime. Serial Trader, signing off.